Good evening, guys. Am I audible? Okay, fine. So, as per your request, we will be covering IAS 12 today. Okay, I'll be going through every standard today, but before that, I'll be giving priority to the IAS 12 income tax. Okay, so are you guys ready? Shall we start? Shall we start? Okay, fine. Just a minute, I'll share my screen. My screen is visible, right? I hope my screen is visible. Okay, fine. So let's start with income tax. Okay, that is IAS 12. This IAS 12 income tax. Guys, just hold on. Let me connect my pencil. Okay, just a minute. Guys, I'm sorry. Just give me 2 minutes. I'm just charging my pencil. Just 2 minutes. Okay. So shall we start? Shall we start? Okay, okay, fine. So we'll start with IAS 12. Okay, we have IAS 12 income tax. So before we start with tax, I want you guys to tell me what are the two different types of taxes you have learned in IAS 12? What are the two different types of taxes that you have learned in IAS 12? Yeah, exactly. We have learned. You have learned tax is divided into two. One is current tax. One is current tax, and the other one is deferred tax. The other one is deferred tax. So before we get into the topic, I want you guys to tell me when will we pay the tax? Suppose, suppose this is 2026. We incurred tax in the year 2026 to 27. Okay. We incurred a tax of 10,000. When will we pay this tax? I want you guys to tell me when will we pay this tax? When will we pay this tax? That is in the year 27, 28, right? What is this year called? What is this year called? What is this year called? Tell me, guys, what is this year called? What is this year called? This 2020, 26, 27 is current year. Okay. This is current year. 26, 27 is current year. But what is 27, 28 called? It is called the assessment year. Do you guys get it? This is called assessment year. So whatever tax we are incurring, when will we pay it? When will we pay it? When will we pay it? In which year? I want every one of you to respond. In which year will we pay tax? When will we pay tax? Suppose we incurred $10,000 in this current financial year. When will we pay this tax? When will we pay this tax? In which year will we pay? In which year will we pay this tax? I want every one of you to respond. I want every one of you to respond. We will pay this tax in assessment year. That is the very next year. Got it? Did you guys get it? When will we pay this tax? We'll pay this. We'll pay this in the assessment year. Got it? Is it clear? Is it clear, guys? Okay, okay, fine, fine. So let's see what is current tax. Okay. Let's see what is current tax. So current tax is the amount payable to tax authorities. What is it? This is the amount payable to tax authorities in relation to business activities of current period. Okay. So let's say we incurred a profit of operating profit of, let's say, 10,000 operating profit, or let's say it is 100,000. Okay. It's 100,000. This operating profit is attributable to the current year. So what will be the current tax? Let's say the tax rate is 10%. So what will be the current tax? What will be the current tax? What will be the current tax? If the tax rate is 10%, it will be 10K. What is this 10K called? It is called the current tax. Current tax is the tax that has been incurred in the current financial period. Is this clear, guys? Is this clear? Is this concept clear about current tax? Okay, okay. Now my next question is, will we be paying this current tax today? I mean, in this financial year, will we pay this current tax in this current year? Will we pay this? Will we pay this 10,000 in the current financial year? I want every one of you to respond. Will we pay this current tax in the current financial year? When will we pay it? When will we pay it? Next year. We have an obligation to pay this in the next year, right? Am I right? Yes or no? We have an obligation. We have not paid it yet. Am I right? We have not paid it yet, but we have an obligation to pay it in the next year, right? So how will you treat this? How will you treat this tax? How will you treat this tax? How will you treat this tax? Where will we show this tax? Where will we show this tax? See, what is the journal entry for this transaction? What is the journal entry for the current tax incurred? What is the journal entry for the current tax incurred? Tell me. Tell me. Do you guys have any idea what will be on the debit side and what will be on the credit side? Any idea? Okay, I'll tell you. See, what is this tax for us? It's an expense, right? Am I right? Is this tax an expense for us? Is this tax an expense for us? It's an expense, right? Yeah, exactly. It will be what? Debit what? Tax expense. Whenever there is an expense, we will debit it. Okay. Whenever there is an expense, we will debit the expense. And are we paying it now? Are we paying it now? Is there any cash outflow? No. So will it be cash on the credit side? No. What will be on the credit side? As part of incurring this current tax, it is increasing our liability, right? It is increasing what? It is increasing our tax liability. So what is it? Tax liability. Tax liability. Got it. Are you clear with this journal entry? Everyone? Okay. Fine. So from current tax, what did you understand? Current tax is the amount payable to tax authorities in respective of the business activities of which period? Of which period? Tell me. Of which period? Of which period? Current year, right? Current tax is the amount payable to tax authorities in relation to business activities of current period. Okay. So we are done with current tax. Okay. We are done with current tax. Now I want to ask you something. See, we will be paying some tax in this year. Okay. Let's suppose this happened in 2026. Okay. We incurred this current tax in 2026. But the tax that we are paying, tax paid in the current year, will be something else. So let's say we are paying tax of 12,000. Okay. What is this 12,000? From where did this 12,000 come? From where did this 12,000 come from? Tell me. From where did this 12,000 come from? I want every one of you to respond. I want everyone's response. I want everyone's response. From where did this 12,000 come from? See, our current tax is only 10,000, but we are paying 12,000. Why? Why? I want everyone's response. I want everyone's response. Come on, guys. Come on, guys. Okay. So this 12,000 is what? It is the previous year's tax. See, I told you, we'll only be paying tax in the assessment year. That is the very next year. So this is the tax of previous period. Do you guys get it? This is the tax of previous period, that is 2025. Are you guys good with this? Do you guys get it? Did you guys get it? We'll be paying, the tax paid will be of the previous year, not current year's tax. See, the whatever tax we are incurring this period will only be paid in the next period. Got it? Whatever tax we are incurring in this financial year or in the current financial year will be paid in the upcoming financial year. Did you guys get it? So this 12,000 will belong to the previous, the tax paid will be of the previous year's tax. Got it? Is it clear? Is current tax clear? Okay, fine. So, with regard to the current tax, how will we show this in the statement? I mean, financial statements. Tell me. So, let's say this happened in 2026, right? 2026 FS. We have 2026 FS. How will we show this? What will be in SOPL and what will be there in SOFP? I want every one of you to tell me. What will be there in SOPL and what will be there in SOFP? Tell me, guys. With regards to this current tax. With regards to this current tax, tell me. What will be there in SOPL and what will be there in SOFP? Yeah, there will be a tax expense. We'll show an income tax expense. An income tax expense of how much? No. It's not 12K. See, don't consider this. Okay, I just gave you this as an example. Okay, I'm asking you about this current tax. I'm asking you about current tax. Yeah, it will be 10K. Okay, this will be how much? 10,000. We'll show this 10,000 in where? We'll show this in SOPL. What about SOFP? What about SOFP? What will we show in SOFP? I want every one of you to respond. What will we show in SOFP with regards to this tax expense? No, it's not 12K. See, where is 12K? I just gave you as an example. Leave it. Leave that case. See, what is the current tax here we are incurring here? We are incurring how much tax? How much tax are we incurring in this particular year? We are incurring 10K, right? So we'll be showing what? Tax liability of how much? 10,000. Now there's one more question. I want to ask you one more question. Is this a current liability or a non-current liability? I want everyone's response. Is this a current liability or a non-current liability? Is this a liability or a non-current liability? Tell me. Take a guess, guys. If you don't know, take a guess. Is this a current liability or a non-current liability? Why is it a current liability? Tell me. Why is it a current liability? Tell me. Why is it a current liability? Yeah, exactly. Because we'll be paying it off we'll be paying it off within 12 months. So it belongs to current liability. This is how we record what? This is how we show current tax in the financial statements. Is this clear, guys? Is this accounting treatment clear? I want everyone's response. With regards to current tax, is it clear? Shall I move on to deferred tax? Shall I move on to deferred tax? Okay. I want everyone's response. Is it clear? Do you guys have any doubt? You can ask me. Don't hesitate. If you have any minute doubt, you can ask me. Don't hesitate. Okay. Because if you don't understand what is current tax, you won't be able to understand what is deferred tax. Is it clear? Shall we move on? Okay, fine. So that's it with current tax. Okay. So now let's see. Do you guys know what is deferred tax? Any idea about deferred tax? Deferred tax. What is deferred tax? How does deferred tax arise? How does deferred tax arise? How does a deferred tax arise? Tell me. Creating future tax. Okay. Why do we create it? My question is, why do we create a future tax? Why? Okay, I'll explain. Okay. Let's say see, I want everyone. Yeah, it's because of temporary difference. Okay. But before that, I'll tell you how a temporary difference arises. Okay. So, okay, let me ask you a general question. How do we pay tax? Do we calculate tax, or does someone else calculate tax? Who calculates tax? On what basis do we pay tax? Tell me. On what basis do we pay tax? Who calculates our tax liability? Who calculates our tax liability? Exactly. The tax authorities calculates our tax liability, right? We'll be calculating tax as per our books, but what is the exact tax that we have to pay? It is based on tax authorities calculations, right? It is based on tax authorities calculations. So I'll explain you. I want everyone of you to listen this very carefully. Okay. It's a very important topic, because if you don't understand the concept, you won't be able to tackle deferred tax problems. Okay. So I want every one of you to listen. See, let's say this is a company's books. Okay. This is a company's books. A company's books. This is tax authority. This is tax authority. Okay. So we have revenue. In a company's books, we have revenue. We have cost of sales. Cost of sales. We have gross profit. We have gross profit. So I want every one of you to listen carefully. Okay. Gross profit. We have profit before interest and tax. Profit before interest and tax. And we finally have tax. Okay. Just a minute. Let me add something more. We have depreciation. We have depreciation. We have entertainment expense. Entertainment expense. Or else leave it. Okay. And we have what? We have PBIT and we have tax. Okay. Let's say the depreciation is XXXX. And let's say the profit before interest and taxes 100,000. This 100,000. The tax rate is 10%. Tell me, what is the tax? What is the tax as per our books? What will be the tax as per our books? Tell me. What will be the tax as per a company's books? What will be the tax as per a company's books? I want everyone to respond. I want every one of you to respond. It will be 10,000, right? What will be the tax? It will be 10,000. But is this the tax that we will be paying? Is this the tax that we will be paying? No. No, right? We'll be paying the tax based on whose calculation? Whose calculation? Authorities. That is tax authorities, right? Okay. So, similarly, tax authorities will also be calculating our tax. Okay. Now, before that, tell me, on what basis, on what concept do we record our FS? On what concept? Which concept? Which concept do we use in order to make, yeah, in order to make our FS, we use which concept? Accrual concept, right? We use accrual concept. What about tax authorities? What about tax authorities? What about tax authorities? They use cash concept. Okay. They use what? Cash concept. Okay. So will the calculations be different for actual concept and tax I mean cash concept? Will it be different? Obviously, it will be different, right? Why? Because they'll only be considering cash outflows and inflows while using cash concepts. Okay. Whereas a company will be using accrual concept. So let's say the revenue x cost of sales. We have similar things. We have GP. Okay. Now my question is, what is depreciation? Is it a cash expense or a non-cash expense? What is depreciation here? Is it a cash or non-cash expense? Is it a cash or non-cash expense? When everyone's response, it's a non-cash expense, right? So, what concept do tax authorities use? What concept does cash tax authority use? Which concept does they use? Do they use? Which concept do they use? Cash concept. So, in a cash concept, will they show depreciation? Will they show depreciation in a cash concept? Why? Because it's a non-cash expense, right? Because it is a non-cash expense. So instead of depreciation, the tax authorities will provide us an allowance. Okay. They'll provide us what? They will be providing us an allowance. What is that allowance called? What is that allowance called? Any idea? What is that particular allowance called? See, instead of depreciation, tax authorities will show what? In their books, they'll be showing, instead of depreciation, they'll be showing what? Capital allowance. Have you guys heard of this? Capital allowance. Capital allowance. Have you guys heard of this? Capital allowance. No. Okay. See, I guess it's not there in the books, but in order for you to understand the concept, you're telling me about entertainment expenses. See, entertainment expenses will be considered in our books. But for tax authorities, they won't consider this entertainment cost as it won't qualify for tax benefits. Okay. So there will be a permanent difference, not temporary difference. But as a result of depreciation, there will be a temporary expense. I will explain this. Just wait. So how do we calculate depreciation? Tell me. How do we calculate depreciation? Depreciation is equal to initial cost. Initial cost divided by how much? Divided by what? Useful life. Right. Divided by useful life. Let's say we bought an asset in the year 2020. Let's say this is 2020. Okay. This is 2020. We bought an asset for 100,000. We bought an asset for 100,000. What is its useful life? Its useful life is 10. So what will be the depreciation? It will be 10,000, right? It will be 10,000. But in what does tax authorities do? What they do is, what is our purchase price? It is 100,000, right? It is 100,000. They know that this is an asset. So what they will do is they will provide us a capital allowance. So let's say the capital allowance for that particular year is 15%. So what will be the allowance that we will be getting? 15%. So how much is 15% of 100,000? What will be 15% of 100,000? It's 15K. Is there any difference? This is capital allowance, okay? This is capital allowance. Is there any difference? What is the difference? What is the difference? 5,000, right? There is a difference of 5,000. Now let me tell you, this 5,000 is what is known as temporary difference. You know why? See, here we are only incurring 10,000, but the capital allowance shown here is 15,000. Okay. So let's say the profit as per. So since there is a difference between capital allowance and depreciation, let's say, what is the difference? 5,000, right? So the PBIT The PBIT of tax authorities. See, this is actually not called PBIT. It is called taxable profit. Okay. As per tax authorities books, whatever is taxable, it is called what? Taxable profit. How much is it? Let's say this is 95,000. So what is the tax? What will be the tax? What will be the tax? What will be the tax? Tell me. What will be the tax? 9,500. What is it? 9,500. I want everyone's response. Is this clear? Is this clear? Why the taxable for profit was different in this case? Because our depreciation was 10,000, and for depreciation, the tax authorities will provide us with a capital allowance instead of depreciation. That capital allowance exceeded more than depreciation, and as a result, the taxable profit was different, right? It was different. So the taxable profit, I mean the profit before tax, in the case of our books is 100,000, whereas in tax authorities books it is 95,000. So hence, as a result, tax of our company is 10,000, and tax of tax authorities how much? 9,500. Is this clear so far? Is this clear so far? Is this clear so far? I want everyone's response. I want everyone's response. Come on, tell me. It's clear, right? Now, see what is our actual tax as per our books. What is our actual tax? What is our actual tax? 10,000. But are we paying 10,000? Are we paying 10,000? Are we paying 10,000? How much are we paying? How much are we paying? Tell me. We are only paying 9,500. We are only paying 9,500. We are only paying 9,500. Got it? We are only paying 9,500. See, I told you, we will be paying tax based on whose calculation? Tax authorities calculations. So, what is the tax that we will be paying? We'll be paying 9,500. But what is our actual tax? What is our actual tax? 10K. But we are only paying 9,500. So, what is this remaining 500? What is this remaining 500? Tell me. What is this remaining 500? You guys have any idea? Do you guys have any idea about this 500? TTD. What do you mean by TTD? Okay. So I'll explain this. Okay. See, whose profit is more here? Whose profit is more? Whose profit is more here? In whose books is the profit more? Oh, taxable temporary difference. Yeah. Exactly. Tell me, whose profit is more here? Company's tax is more. I mean, sorry, company's profit is more, right? So more profit means what? More profit means what? More profit means what? More tax, right? More profit means more tax. But as per tax authorities, tax is low. I mean, profit is less. So what is it? Less profit means what? Less profit means less tax. So how much tax are we paying here? Are we paying less tax or more tax? Are we paying less tax or more tax? We are paying less tax, right? See, we are not paying our liability. What was our liability? What was our current tax? It was 10,000. But how much are we paying? How much are we paying? How much are we paying? We are only paying less, right? We are not paying our full liability, no? What is our liability? Our liability was to pay 10,000 to the tax authorities as per our books. But how much did we pay them? We paid only 9,500. So what is this 500 known as? This 500 is what we call what? Deferred tax liability. Got it? This is what we call deferred tax liability. Did you guys understand? Is this clear? See what happened here? We were entitled to pay 10,000, but we only paid how much? 9,500. What else is remaining in our liability? What else is remaining in our liability? 500 is remaining, right? We have to pay it. We have to pay it to the tax authorities anyway. So what is it? It is a deferred tax liability. So let me tell you guys, you'll be wondering how this is a temporary difference. So let's say this capital allowance, it is 15% for which year? For current year, right? In the next year, this might be equal to 5%. Okay. This may be equal to 5%. So what happens? What happens? The capital allowance will be 5,000 and the depreciation in our books will be 10,000. Okay. So the taxable profit will be more in tax authorities books and it will be less in our books. So as a result, what arises? Instead of paying less tax, we are paying more tax. Instead of paying less tax, we are paying more tax. So what will arise? What will arise as a result of that? Instead of paying less tax, we are paying more tax. So what will arise? See here what happened. In 2020, what happened? Instead of paying more tax, we paid less tax. But here, instead of paying less tax, we are paying more tax. So what will happen? So what will happen? Deferred tax asset, right? Yeah, exactly. Deductible temporary difference. Yeah. That is deferred tax. We call it by the term what? Deferred tax asset. See, I will explain you this deferred tax asset in a more simple way. Just wait. Just wait. So I want every one of you to listen, okay? I want every one of you to listen properly. I want every one of you to listen. Okay. So here we have asset. Here we have assets carrying amount. And we have tax. We have deferred tax. Okay. So I want every one of you to respond. Okay. Let's say this is an asset. Okay. Let's say this is a machine. This asset is a machine. The carrying amount of machine is higher in our books, but in tax base, it is lower. Okay. What is this asset? This asset has a higher carrying amount in our books while comparing to the tax authorities books. So who is having more asset here? Who is having more asset here? Is it us or is it tax authority? Who is having more assets here? Whose assets value will be more? Tell me. Whose assets computation will be more? Tell me, guys. The carrying amount of this machine is higher in our books. Okay, so let's say I'll give you a value. I'll be better. Okay. So the carrying amount of the asset is 10,000 in our books. It is 9,000 in tax authorities books. Okay. So who is having a higher asset in this case? Who is having the higher asset in this case? Tell me. Is it our books or is it tax authorities books? Is it in our books or is it in tax authorities books? We are having higher asset, right? Our assets computation is more, right? Am I right? Is it clear? Our asset computation is more, right? Our asset computation is more, right? Is it clear? So more assets means what? More assets means more profit, right? More assets means what? More assets means more profit, right? We'll be having more profit, right? Did you get it? Did you get it? More asset means higher the value of asset, higher will be the profit. Is it clear? Is this concept clear? Is this concept clear? So higher profit means what? Higher profit means higher tax, right? Yeah, exactly. Higher profit means what? Higher profit means what? More tax, right? Is it clear? Is it clear, guys? Okay, fine. Now let's come on to the tax authorities case. The tax authorities asset computation is less compared to our computation. Their asset computation is less. Okay. So less assets means what? Less assets means what? Tell me, guys. Less assets means what? Less assets means what? Tell me. Less assets means less tax. Yeah, that is less profit. Less profit means less tax. So who is having more profit here? Who is having more profit here? Who is having more profit here? Tell me. Is it tax authority or us? I want everyone's response. I want everyone's response. Who is having more tax here? Who is having more tax here? Is it the tax authority or is it us? Exactly. We are having more assets. So we are having more profit. Right. So we are having more tax. So the tax will be more in our books, right? The tax will be more in our books. But what about tax authorities books? In tax authorities books, we are having less tax, right? So will we be paying tax based on our books or will we be paying tax based on the tax authorities books? Tell me. Tax authorities books, right? But our tax is more. Our tax is more. We are entitled to pay more, but how much are we paying? We are paying less, right? Here, even though our tax is more, we are only paying less tax, right? You guys get it? Is it clear? Even though we are having more tax, what are we doing? Even though we are having more tax, we are only paying less. So what does that mean? Will it create a deferred tax asset or deferred tax liability? See, we were entitled to pay more tax, but we are only paying less tax for the time being. Okay. We are actually having more tax, but we are only paying less tax. So what else is remaining? What is that term called? Here we are having more tax, but we are paying only less tax. We are only paying less tax. So what is it? So what is it? It is a deferred tax liability. Did you guys get this concept? Why a deferred tax liability arises? Because we still owe tax authority the remaining tax. So as a result, what arises? What arises as a result? Deferred tax liability. Is this clear for everyone? I want everyone's response. Is this concept clear? Is this concept clear? Everyone, I want everyone's response. Is it clear, guys? Okay, fine. So, next case, we have asset. Okay. Now the assets carrying amount is 9,000 and the tax based on tax authorities calculation it is 10,000. The carrying amount of the asset is 10,000 in tax authorities books and it is 9,000 in our books. So now tell me, what will this result in? What will this result in? Everyone, I need everyone's response. Why? Why is it a deferred tax asset? Tell me, why is it a deferred tax asset? Why is it a deferred tax asset? Why is it a deferred tax asset? Tell me, I need a proper explanation. Tell me, why is it a deferred tax asset? Why is it a deferred tax asset? Why do you think it is a deferred tax asset? Yeah, exactly. Paying, we are paying more tax. We are paying more tax. But are we having that much tax? Are we having that much tax? No. Our assets competition is less. Less assets means less profit. Less profit means less tax. Whereas in tax authority, asset competition is more. So more profit, more tax. So we are paying more tax, but are we entitled to pay more tax as per our books? Are we entitled to pay more tax as per our books? No, right? But we are paying more tax. So what is this? What does this mean? It will be an asset in the future, okay? It will be a deferred tax asset. Is this clear, guys? Is this clear? Is this concept clear? Everyone. I think it's everyone's response. Okay, fine. So next, let us take the case of liability. Okay. See, before answering, I want you guys to think properly. Okay. Think properly, apply the concept and tell me whether it will result in a deferred tax asset or deferred tax liability. Okay. I want you guys to think properly before answering. Okay. So let's say the liability is 10,000 in our books and it is 9,000 in tax authorities books. Will this give rise to a deferred tax asset or will it give rise to a deferred tax liability? Tell me. Tell me, guys. Will it give rise to a deferred tax asset or will it give rise to a deferred tax liability? Think properly and tell me. You can take your time. I need everyone's response. I need everyone's response. Everyone. I want everyone. I want everyone you to respond. I want everyone's response. Tell me. Is it a deferred tax asset or is it deferred tax liability? Everyone is telling it is a deferred tax asset. Is it a deferred tax asset? Is it a deferred tax asset? Or is it a deferred tax liability? Are you guys sure it is a deferred tax asset? Are you guys sure? 100%. Are you guys 100% sure that it is a deferred tax asset? Recheck your valuation. Are you sure? Okay, guys, almost everyone have responded. So you guys are correct. It is a deferred tax asset. How is it a deferred tax asset? For those who have not answered, I'm explaining. See, more liability means what? More liability means what? More liability. We're having more liability. What does that mean? More liability means what? Less profit, right? More liability means less profit. Less profit means less tax, right? More liability means what? It will reduce our profit. No, it will reduce our profit and our the resulting tax will be less. While compared to tax base, what is happening? They are having lesser liability compared to us. So less liability means more profit. More profit means more tax. So are we paying more tax or are we paying less tax in this case? Are we paying less tax or are we paying more tax? Are we paying less tax? We are paying more tax, right? We are paying more tax. How? Our tax authorities calculation is more. So we have to pay more tax even though we are having less tax. So as a result, what arises? What arises? Deferred tax asset arises. Did you guys get it? Any doubts? Those who have told less tax, any doubts? Those who have told less tax, do you guys have any doubts? Guys, tell me, do you guys have any doubts regarding this? Is it clear? Is it 100% clear? Is the concept clear? Is the concept clear? For everyone, I need everyone's response. I need everyone's response. Okay, fine. So here we have one more case. The liability is low in our books, but it is high in tax authorities' books. So what does this result in? What does this result in? Is it a deferred tax asset or a deferred tax liability? Is it a deferred tax asset or a deferred tax liability? Yes, exactly. It is a deferred tax liability. Why? Because see, less liability means more tax, more income. More income means more tax. But as per tax authority is having higher liability, meaning lesser profit. Lesser profit means lesser tax. So we are paying lesser tax or more tax here. Are we paying less tax or more tax here? Are we paying less tax or more tax? Is it more? See, we are paying tax based on tax authorities calculations. As per tax authorities calculations, is the tax more or less? It is less, right? So we are paying less tax, even though we are having more tax as a liability, we are only paying less tax. So what is the remaining? It is a deferred tax liability. Did you guys get it? Is this concept clear? If you are good with this concept, you are good with deferred tax. If you guys understood this properly, means you are good with what? You are good with deferred tax. Are you guys okay with this? Want everyone's response? Shall we do a problem then? Shall we do a problem? Okay, fine, fine. So there's a question in textbook. Just give me a minute. I'll take it now. Just give me a minute. Okay, guys. So let us do a problem. Let us try doing a problem. Okay. I hope you guys can read this. Is the question visible? Okay, okay. I want you guys to tell me whether how this should be recorded in our books. Just tell me once you're done reading, okay? Just tell me once you're done reading the question. If you are done reading, just please update me. Tell me once you're done reading. So are you guys done? Are you guys done reading? Are you guys done reading? Okay, fine, fine, fine. So, what do they tell us? See, a company's financial statements show profit before tax of 1,000. So, we are the company, right? We are what? We are the company. So, tell me, how much years are there? 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 Tell me, how much years are there? How much years? How much years are mentioned in the question? 3, right? So we have what? Year 1. We have year 1. We have year 2. And we have what? We have year 3. Okay. We have year 1, year 2, and year 3. Now, tell me what, as per our books, what is our operating profit? What is our profit before tax? As per the company, what is the profit before tax? It is 1,000, right? How much is it? How much is it? How much is it? It is 1,000, right? For year 1, it is 1,000. For what about year 2? What about year 2? What about year 2? How much is it for year 2? Tell me. What is the profit before tax? No, 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 it's 1,000 only, right? See, for every year we are having 1,000. Okay, did you get it? For every year, I'm talking about profit before tax. What you have told me is after deducting tax, maybe. Okay, let's focus on this. Okay, let's focus on this. What is our tax? See, as per question, a company's financial statements show profit before tax of 1,000 in each of years 1, 2, and 3. So, what is our profits? That is PBT. What is the PBT for every year? It is 1,000. Got it. So, my next question is, this is profit before tax. So, what will be the profit? What will be the profit each year? What will be the profit? Tell me. What will be the profit? What will be the tax? What will be the tax then? What will be the tax? What will be the tax? It will be 300, right? Is it clear, everyone? Is it clear? Why? Because tax is 30. The tax rate is 30%. So how much is the tax? How much is the tax? 300. So what is the net profit? What is the net profit? What is the net profit? 700. So is this based on our calculation or is this based on tax authority's calculation? Tell me. Is this based on our calculation or is this based on company's calculation? Sorry, tax calculation, tax authority's calculation. It's our calculation, right? So, do we pay tax based on our calculation? Do we pay tax based on our calculation? Do we pay? No. We will pay tax based on whose calculation? We will pay tax based on whose calculation? Tax authority's calculation, right? Exactly. So, we have to compute for tax authorities taxes, right? As we did before. We have to compute what? tax based on tax authority. Is it clear? So we are done with company. Now we are moving on to tax authority. Tax authority. Now read the question. See, this profit is stated after charging depreciation of how much? How much is the depreciation charged every year by the company? How much is the depreciation charged by the company every year? It's 200, right? Do you guys have any doubt regarding that? What is being charged as depreciation in the company's books? How much? It is 200, right? See, it's given in the question. It is 200. My question is, will we charge? Will tax authority charge this depreciation expense in their books? No. No, right? Will they charge? Why? Why do they not charge depreciation? Because it is a non-cash expense. So, coming on to tax authority, what we have? See, this 1,000 is after, see, we got this profit before tax after deducting what? After deducting depreciation, right? We got this 1,000 after deducting what? After deducting depreciation. See, you can see the question. This profit is stated. See, this profit is stated after charging what? Depreciation of 200 per annum. So let me tell you, what is the profit as mentioned by the company here? We have year 1, we have year 2, we have year 3. Now my question is, what is the profit? What is the profit as per company's books? As per company's books, what is the profit? It is 1,000, right? As per company, it is 1,000. But this is after deducting depreciation, right? This is after deducting depreciation. Do we deduct depreciation in tax calculation, in tax authorities books? No. So what should we do with this depreciation? What should we do with this depreciation expense? What should we do with this depreciation? I want everyone's response. What should we do? What should we do with this depreciation? We have to add it back, right? So what is the depreciation here for every year? It is 200. So we have to add it back. 200 every year. Now, I told you before, the tax authority will give us what? Tax allowance instead of depreciation, right? See, instead of depreciation, tax authority will be showing what? Capital allowance. I told you. Remember, in the previous case, instead of depreciation, what did they give us? They gave us what? They gave us capital allowance. So, by reading this question, tell me what is the allowance that has been granted by tax? What is the tax allowance in the first year? What is the tax allowance? Yeah. So tax allowance means what? Tax allowance will deduct the tax liability, right? It will do what? It will do what, guys? It will do what? Yeah. So should we deduct or add? Should we deduct or add this? Should we deduct or add this? Tell me. Should we deduct or add this? It's a tax allowance. As per tax authority, we will have to what? Deduct this. Instead of, see, we deducted depreciation while calculating profit, right? In the company's books. Similarly, what tax authorities do? They will deduct our taxable profit by giving us a tax allowance. What is the tax allowance they are providing here? It is 240 in the first year. What about the second year? What about the second year? 210. It is 210. What about the third year? What about the third year? It is 150. 150. So tell me, what is the taxable profit? What is the taxable profit? Taxable profit. Tell me, what is the taxable profit here? In the first year, it is 960. What about second year? What about second year? It is 990. What about third year? What about third year? 1050. Now, okay. What is the profit after tax? What is the net profit? So this is not the taxable profit. Okay. Okay. Tell me. Just wait. This is a net profit. Okay. Okay. Now tell me, what is the taxable profit? What is the taxable profit as per tax authority in the first year? What is the taxable profit? I'm asking about taxable profit. Am I asking about taxable profit regarding tax authorities books? It's 960, right? But I told you taxable profit. See, you can go back and see. See, here you can see the profit before tax. The profit before tax is what we call taxable profit in tax authorities books. Got it? What is the profit before tax in year one? What is the profit before tax in year one? What is the profit before tax in year one? Tell me. No, that's net profit, right? That's net profit. I'm asking about profit before tax. Okay, just leave it. Just leave it. Okay, just leave it, whatever it is, leave it. Let's calculate what? See, this is taxable profit. What is 960? It is taxable profit. For what will be the tax as per company's books? Sorry, tax authorities books. What will be the tax? It will be 288 for the first year, right? 288 for the first year. What about second year? What about second year? 297, right? 297. Okay, fine. What about third year? What about third year? It is 315. Now, guys, which tax will we pay? Based on whose computation? Whose tax will we be paying? Will it be ours or will it be tax authorities? Authorities, right? Tax authorities. So tell me, what is the first year's tax as per tax authority? What will be the tax that have to be paid as per tax authorities books? 288, right? But what is our tax? As per our books, what is the tax? As per our books, what is the tax? Who is having more tax here? Who is having more tax here? We are having more tax, right? But how much are we paying? Are we paying more tax or less tax? Are we paying more tax or less tax? Less tax, right? We are paying what? We are paying less tax. Got it? Did you guys get it? We are paying less tax. We were entitled to pay 300, but how much are we only paying? How much are we only paying? We are paying only 288, right? We are only paying 288. So what else is remaining? How much is remaining? Tell me. What else is remaining for us to pay? See, our actual profit is 300. Sorry, our actual tax liability is 300, but we are only paying 288. So how much is remaining? How much is remaining? 12 is remaining, right? What is remaining? 12. So let's come to the conclusion. Okay, since before answering, think. We were having more tax, but we are only paying less tax. We were having more tax, but we only paid less tax. So what does that mean? Is it a deferred tax asset or a deferred tax liability? Tell me. Is it a deferred tax liability or deferred tax asset? We were having more tax, but we only paid how much? Less tax. So what else is remaining for us to pay? 12. So we are entitled to pay this 12. We haven't paid it yet. So what is it? It is a liability. What liability? Deferred tax liability. Is this clear, guys? Is this clear? What is this 12? What is this 12? What is this 12? So the deferred tax, deferred tax. Okay. So the retail here will be how much? 12. Got it. Is this clear? Is this picture perfect? I want everyone's response. Is this picture perfect? Is this picture perfect? Okay, okay, fine, 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 fine. Okay, okay, come on, come back, come back. So we are done with year one, right? We are done with year one. Now let's move on to year two. What is our tax in year two? What is our tax in year two? Tell me. What is our tax in year two? Everyone, what is our tax? What is the tax that has to be paid as per our books? 300. But will we pay tax based on our calculation? Will we pay tax based on our calculation? No. Whom? Whose calculation will be used? Tax authority's calculation. What is the tax authority's tax payable? What is the tax authority's tax payable? How much is it? How much is it? Everyone, what is it? How much is it? This 297, right? So again, tell me, who is having more tax here? Who is having more tax here? Us. We are having what? We are having more tax. But how much are we paying? Are we paying the whole tax? Are we paying the whole tax? Are we paying the whole tax? No. How much are we only paying? We are only paying 297 out of the 300. We are only paying 297 out of the 300. So we are paying less tax. We are yet to pay that 3. So what is it? Is it a deferred tax liability or a deferred tax asset? Is it a deferred tax liability or a deferred tax asset? Exactly. It is a deferred tax liability. Got it. It is a deferred tax liability. How much is it? 3. Is this clear, guys? Is the second year clear? No doubts, right? No doubts, right? Okay, fine, 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 fine. Now, let's move on to year 3. Okay. Now, let's move on to year 3. Tell me, what is the tax? What is the tax payable by the company in year 3? What is the tax that is to be paid by the company in year 3? Everyone's response. How much is it? 300. But as per tax authority, how much is it? But as per tax authority, how much should we pay? How much should we pay as per tax authority? How much should we pay? I want everyone's response. How much should we pay as per tax authority? How much should we pay as per tax authority? We have to pay how much? 315, right? Whose tax is more here? Is it ours or is it tax authorities? Is it ours or is it tax authorities? It's tax authorities books, right? So are we paying more tax or less tax here this time? Are we paying more tax or less tax this time? Are we paying more tax or less tax this time? Tell me. Everyone, are we paying more tax or less tax this time? Our actual tax expense was 300, but as per tax authority, it is 315. So how much will we be paying? How much will we be paying? 315, right? We are paying more tax. We are paying more tax. So what is it? What is it? Is it a deferred tax liability or a deferred tax asset? It is a, exactly, it is a deferred tax asset. It is a deferred tax asset. How much is it? 50. If the deferred tax concept is clear, I want you guys to put a thumbs up in the chat box. If it is clear, put a thumb. It's a thumb emoji in the chat box. Is it clear? Only if it's 100% clear, put that emoji. Is it clear, guys? Do you guys have any doubts regarding deferred tax concept? Do you guys have any doubts? Is it 100% clear? Is it 100% clear, guys? So, guys, were you taught this way? Were you taught this way regarding deferred tax asset and deferred tax liability? Okay, fine, 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 fine. So, is this clear, guys? So, see, you can see that what is a temporary difference? See, we'll be anyway paying. See, in the first year, how much did we not pay? How much did we not pay in year one? In year one, how much did we not pay? 12. In year two, how much did we not pay? How much did we not pay? 3. 3. In year 3, how much did we pay extra? 50. Are these both equal? Are these both equal? Yes. So that is the reason. See, it will be settled anyway in the future. Okay. It will be settled anyway in the future. So that is the reason. That is the reason we call it a temporary difference. Got it? That is the reason why it is called a temporary difference. In the future, it will be settled anyway. Okay, see, as you can see, even though we are not paying the full tax in 12, full tax in the year 1, we settled it in year 3, right? We settled the whatever was remaining in year 3. Got it? Is it clear? That is the reason why we call this difference as temporary difference. It will not have an impact. In general, its net impact will be 0. Okay, net impact will be 0. As we progress in the future, we'll be settling it off. Is it clear? What is meant by temporary difference? Got it. But that's not the case with what? Permanent difference. There are two kinds of differences. Temporary difference will be for a temporary period of time, but permanent difference will have an effect permanently. Okay. What happens here is, see, you told me about entertainment expense, right? We will be showing entertainment expense in our books, but in tax authorities books, what happens? In tax authorities books, they won't be showing this entertainment expense as it won't qualify for tax. It won't qualify for tax allowance. So as a result, they won't be showing what? They won't be showing entertainment expense. Okay. So the the resulting difference will be a temporary, permanent difference in that case. But here it is a temporary difference. So only for temporary difference, what we'll recognize? See, we will only recognize deferred tax in the case of what? In the case of which difference? In the case of which difference? In the case of which difference? Temporary difference. Got it. We'll only recognize deferred tax in the case of temporary difference. Is it clear? Everyone? Okay, okay, fine, fine, fine. Okay, okay, okay. Hmm. So there's one more topic. I mean, not one more topic. There is a topic in your books regarding under provision and over provision. Okay. Under provision and over provision. Let's get you one question and I'll explain it with that question. Okay. That will be better. So I want you guys to tell me something. Have you guys revised all the portions of FR? Or are you yet to complete the portions? Have you revised at least once the entire syllabus? Come on, tell me. So you are done with the syllabus, right? Okay, okay, fine, fine, fine. How is it? How is FR? How is FR? Is it your first paper? Is FR your first paper? Have anyone completed any of the papers so far? Any papers of ACCA? Any papers? No, no, no. So this is your first attempt, right? This FR is your first attempt, right? Okay, 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 fine, fine, fine. So are you guys feeling confident? Are you guys feeling confident? Who took class for you? Who took FR class? Okay, Swagat. Okay, okay, fine, fine. Is it Swagat for everyone? Or was there any other faculties? Nihal, sir. Okay, okay, okay. How was the classes? Was it good? Oh, cows to go people. Fine, 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 fine. They're having different faculties. Okay, fine. How was the classes? Okay, 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 okay. Fine, 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 fine. Okay. So let's do a problem. Okay. Let's do a problem. This is regarding under provision and over provision. Okay. This is regarding. Are you guys familiar with under provision and over provision? Tell me. Under provision and over provision. Do you guys know how to do a problem? Under or over provision. Okay. Then I want you guys to solve this. I want you guys to tell me the answer for this question. What about case one? What will be our tax expense for the year ended 31st December 20x8? What will be our tax expense for the year ended 20x8? Take your time. Do and tell me. I hope you guys are doing the problem. Tell me once you're done. Okay. Are you guys done? So what is the first answer? What is the first answer that you got? What is the answer that you got? Tell me, guys. What is the answer that you got? Okay. In the first case, you're telling me that it is over provision. Is it actually over provision? Is it actually over provision? No, it is not over provision. Okay. See, In the first case, it is what? In the first case, it is under provision. It is under provision. Do you know why? What is meant by under provision? What is meant by under provision? I'll tell you what is meant by under provision. I want every one of you to listen. Okay. I want every one of you to listen. Listen carefully. Under provision means we are estimating our liability and the liability comes above us. Okay. So let's say we are estimating that our liability would be 100,000. Okay. Listen carefully. We are estimating that our liability will be 100,000. But in reality, the liability was 120,000. The actual liability was how much? 120,000. But what was our estimated provision? How much did we show this liability as? 100,000. So, but what was our actual liability? It was 120,000. What was our actual liability? It was 120,000. So, we undervalued the liability, right? We undervalued the liability. Hence the term under provision. Got it? Is it clear? Is it clear, guys? Is it clear? Is this under provision clear? What happened here? Here, what we did is we estimated that a liability of 100,000, how 100,000 would arise. But what happened? Instead of 100,000, 120,000 arised. So our estimate was wrong, right? We undervalued the liability, right? We undervalued the liability, and hence the result, what will arise? Under provision will arise. The same concept, apply it to this question. What are they saying us? See, Symbol has estimated its income tax liability for the year ended 31st December 2018. What is this? Okay, sorry guys, it's okay, fine. How much is the liability? How much is the liability for year ended 31st December 2018? What is the estimated liability? 180,000. Okay, fine. What is the estimated liability for the previous year? 150,000. Right. I told you one thing. I told you what? We will be paying our incurred current tax in the next year, right? So we'll be paying tax. So what tax will we be paying in this year? What tax will we be paying in this year? Tell me. Whose tax? Which year's tax will we be paying this year? Which year's tax will we be paying this year? Tell me. We'll be paying previous year's tax, right? Will we be paying this 180,000? Will we be paying this 180,000? No. We won't be paying this 120,000 as it was incurred in this current year. Got it? Is it clear? When was this tax incurred? When was this tax incurred? When was this 180,000 incurred? When did this incur? In the current year. So will we be paying it? Will we be paying it in this year itself? No. Right. We won't be paying it in the current year. We will be paying. When will we be paying this 180,000? When will we pay this 180,000? Tell me. Everyone, when will we be paying this tax? Next year, right? So, what will we be paying in this year? Whose tax? Which year's tax? Which year's tax? Previous year's tax, right? What is the previous year's tax? What was the estimated previous year's tax? Tell me. 150,000. We estimated that the previous year tax will be 150,000, right? Is it okay? But what is the actual tax? What is the actual tax that we paid this year to the tax authorities? Tell me. 165,000. We estimated a tax liability of 150,000. But however, it didn't meet our expectations. The tax liability was actually how much? 165,000. So, did we undervalue or overvalue this liability? Did we undervalue or overvalue this liability? Tell me. We undervalued this liability, right? So undervalued. So what does that mean? Under provision or over provision? Under provision or over provision? Under provision or over, yeah, exactly. It is under provision. So what happens if there is an under provision? What happens? I'll tell you. So what is the tax liability that we have estimated for the current year? Okay, current year's estimate. I want you guys to tell me what is the current year estimate for the tax. Current year's estimate. What is it? How much is it? Current tax estimate. How much is it? What is the current income tax liability? 180,000, right? Year-end estimate is equal to how much? Year-end estimate is equal to how much? 180,000. 180,000. So now what will happen to this under provision? See, we only estimated 150,000. What else is there? What else is there? What else is remaining? What else is remaining to be added to that provision? How much is the difference? How much should be added to that provision? Tell me, how much should be added? See, we only estimated 150,000, but what is the actual tax expense? Okay. Okay, it will be 15,000. So under provision, if it's under provision, see, if it's under provision, what will happen to our income tax expense? It will increase by how much? 15,000. Got it. We'll add under provision. Okay. So what will be the total income tax expense for that current year? Income tax expense for that current year. How much will it be? How much will it be? It will be 195,000. Did everyone get this concept? Everyone in the class, did you understand this under provision? When does an under provision arise? An under provision arises when we undervalue our liability. Okay. We undervalue our liability. Got it? We undervalue our liability. Is it clear? So we are done with what? We are done with A part. Now, I want you guys to tell me what will be the case in B. I want you guys to tell me. Just try. How much will it be? What will it be? Will it be under provision or over provision? Okay, over provision. Why is it over provision? Why is it over provision? Why is it over provision? Tell me. Why is it over provision? Less than estimated. Got it. We are overvaluing the liability, right? We are overvaluing what? The liability. And hence, what will happen? An over provision will result. It will result in a over provision. So, what is the year-end estimate? What is the year-end estimate? What is the year-end estimate? How much is it? 180,000. So, we have already overvalued the liability. So, we have to do what? What should we do with over provision? We should deduct it from what? Year-end estimate. We should deduct it from year-end estimate. How much? How much is the over provision? How much should we deduct? How much should we deduct? Tell me. How much should we deduct? Exactly. We should deduct 10,000. So what will be our income tax expense for the current year? Income tax expense for the current year will be how much? 170,000. Is this clear, guys? Is this clear? Is deferred tax tough? Is this tax tough? Is it tough? Okay, okay, fine. I need everyone's response. Is this clear? Is this concept clear? How under provision and over provision comes? Are you guys clear with this? See, it will be tested in exam. Okay, I want you guys to score full marks in this topic. Okay, is it clear? Okay, okay, fine, fine, fine. So you guys do one thing. Be back by 6. Okay, be back by 6. Be back by 6. So guys, are you guys back? Shall we start? Okay, okay. Okay, fine. So let me ask you guys one thing. Do you guys know what is revaluation gain? What is a revaluation gain? What is a revaluation gain? Tell me. When will a revaluation gain arise? When will a revaluation gain arise? When will a revaluation gain arise? Tell me. Yeah. See, a revaluation gain arises when the carrying amount of the asset is lesser than its fair value, right? This implies what? Revaluation gain. So, if asset goes, see what happens if asset increases. What happens if asset increases? We will be incurring more tax, right? We will be incurring what? We will be incurring what? We will be incurring what? Tell me, guys. If our asset increases, more tax. If our asset increases, more profit implies more tax. Is that clear? Whenever there is an increase in asset, it implies that our profit will also increase, and as a result, it will result in more tax. So now, I want you guys to tell me, what happens if there is a revaluation gain? What happens if there is a revaluation gain? What happens if there is a revaluation gain? Tell me. What happens if there is a revaluation gain? What will be the impact on the asset? What will be the impact on the asset? Tell me. On everyone's response, come on, tell me. When there is a revaluation gain on an asset, what happens to the net assets? What happens to the net assets? Come on, guys, tell me. Yeah, the value of the asset increases, right? The value of the asset will increase. So more asset means what? More asset means what? More asset means what? More asset means more profit. More profit means what? More tax, right? More profit means more tax. Now my question is, if we are revaluing an asset, will the tax authority show this revaluation gain? My question is, will the tax authority show this revaluation gain? Why? Why is it? Why is it so? Why? Yeah. We are not receiving any cash on this revaluation gain, right? It is an unrealized gain, right? It is what? It is an unrealized gain. So, since it is an unrealized gain, where will we show this revaluation gain? Where will we show this revaluation gain in our books? Where will we show in the FS statements? Where will we show this revaluation gain? Exactly. We will show this in OCI. So let me explain you this an example. So let's say a company, let's say a company, okay, A company purchased an asset or a machine. Let's say it's a machine. Okay. It's a machine. Its cost was $10,000. Cost is equal to $10,000. It was purchased on 1st Jan 2020 with a useful life of 10 years. 10 years. Got it. Okay. So now tell me, what will be the initial value of the machine? Initial value. Tell me, I want everyone's response. What is the initial value of the machine as on 1st Jan? What is the value of the machine as on 1st Jan? Just 10,000, right? It will be initially recognized at its cost. What is the cost here? It is 10,000. So I want the closing value of this machine. So in order to get the closing value of the machine, what should we charge on this? What should we charge on this? Exactly. You should charge depreciation. What is the depreciation? What is the depreciation? What is the depreciation? 1,000. It is 1,000. So what is the closing amount? What is the closing value of the machine? Closing value of machine on 31st December 2020 is how much? 9,000. It is 9,000. Let's say the fair value of the machine. Fair, we are using revaluation model, okay? We are using revaluation model. The fair value of the machine on 31st December 2020 is equal to, let's say, 9,500. 9,500. Okay, you guys get it? So, the fair value of the machine as on 31st December 2020 is equal to how much? 9,500. So tell me, what is happening here? What is happening here? What is happening here? There is a revaluation gain, right? Revaluation gain of how much? How much is the revaluation gain? 500. Will this 500 gain be shown by tax authority? Will this gain be shown by tax authority? I want everyone's response. Will this be shown by tax authority? Will this be shown by tax authority? Everyone, will this be shown? Will this be shown by tax authority? Will this revaluation gain be shown by tax authority? No. Why? Because this is an unrealized and a non-cash gain, right? It is an unrealized and a non-cash gain. So as a result, we won't be showing what? We won't be showing this gain in the tax authority. The tax authority won't be showing what? They won't be showing the gain in their books. Got it? So what is the impact on this revaluation gain in our books? What is this revaluation gains impact on our tax calculation? What is the impact of this revaluation gain on our tax calculation? Think and tell me. What will be the impact of this revaluation gain on our tax computation? Everyone, I want everyone's response. I want everyone's response. What will be the impact of this revaluation gain on our tax computation? Why is it more tax? See, revaluation gain results in the increase in value of assets, right? This increase in value of assets in turn increase what? Profit. So the profit will be more when there is a revaluation gain. When there is more profit, there will be what? When there is more profit, there will be more tax. Is this clear? Is this clear, guys? I want everyone's response. Everyone. Is this clear? So the revaluation gain results in more profit. So what is the revaluation gain here? What is the revaluation gain here? What is the revaluation gain here? Okay. So what will be the revaluation gain as per tax authorities books? What will be the revaluation gain as per tax authorities books? What will be the revaluation gain as per tax authorities books? What will be the gain? What will be the revaluation gain as per tax authorities books? Will there be any revaluation gain? Tell me. Will there be any revaluation gain? No gain. So what is it? Zero. Zero, right? Exactly. So what is the difference? What is the difference? What is the difference between the value of our company and the value of the tax authority regarding revaluation gain? What is the difference? Tell me the difference. 500. So is this a temporary difference? Is this a temporary difference? Tell me. How is it not? It is a temporary difference. You know why? You know why? See, even I had a doubt during when I was studying FR that how is it a temporary? I mean, how is it not a permanent difference? See, I'll tell you. See, this is a temporary difference. You know why? Let's say the value of the asset is 9,500, right? As per our books. Got it. When we are selling this, we'll be receiving this whole cash now. When we are selling this asset, we'll be receiving 9,500, right? We'll be receiving 9,500. This 9,500 will be shown where? Where will this 9,500 be shown? It will be shown in the tax authorities, right? As we are disposing what we are getting, we are receiving cash, right? We are receiving cash of how much? 9,500. So they will be recognizing this value when we are disposing the asset. Okay, got it. When we are disposing the asset. So our taxable income will be more there. So as a result, this will get tallied. Okay. Did you guys get it? Did you guys get it? Okay. So this is a temporary difference. Okay. This tax will have an impact when this asset is disposed. Got it. The only difference is that we are recognizing the deferred tax now. They will calculate it later. That's the only difference. Got it. So is this a temporary or permanent difference? Tell me. Is this a temporary or permanent difference? Is this a temporary or permanent difference? Tell me. Temporary difference. Got it. So this is a revaluation gain, right? Where did we show this revaluation gain? Where will we show this revaluation gain? OCI. So my question is, our asset is more and our tax is more, but as per tax authority, will they be showing this gain? My question is, will they be showing this gain? Will they be showing this gain? No, right? Tax authority won't be showing this gain. So, as per tax authority and as per our company, whose profit will be more? Tell me. Whose profit will be more? Is it our company or is it tax authority's calculation? Our profit will be more. Implies what? Implies what? More profit implies what? More tax. So we are having, as per our company, as per our calculations, we are having what? We are having more tax. But in respective of tax authority, is it more or less? Are they having more tax? No, they are comparatively having less tax. So how much should we pay? Should we pay more tax or we should pay less tax? Should we pay less tax or should we pay more tax? Tell me. Less tax. We are having a liability of more tax, but we are paying less tax. So deferred tax asset or deferred tax liability? Everyone's response. I need everyone's response. Come on, tell me. Is it a deferred tax asset or is it a deferred tax liability? Tell me. Deferred tax liability. How will we calculate deferred tax liability? What is the temporary difference here? What is the temporary difference here? 500. How will we calculate deferred tax? Deferred tax equal to temporary difference. Temporary difference into what? Temporary difference into tax rate. Okay. Tax rate. Let's assume the tax rate is 30%. So temporary difference is 500. Tax rate is 30%. So what will be the deferred tax? What will be the deferred tax? It will be 150. Tell me, is it a deferred tax liability or a deferred tax asset? Is it a deferred tax asset or a deferred tax liability? Everyone. Is it a deferred tax liability or a deferred tax asset? It is a deferred tax liability. Got it. This is a deferred tax liability. Now, let me tell you one more thing. Where did we show this revaluation gain? Tell me once again, where did we show this revaluation gain? OCI, right? We showed this in OCI. Similarly, we will be showing this deferred tax where? We'll also be showing this deferred tax in the OCI. Is it clear, guys? Is it clear for everyone? I want everyone's response. We want to work out a problem. So for that, I need you guys to understand this concept very clearly. Everyone. See, if you guys have any minute doubt, please ask me right now itself. You can ask me in the chat box. Come on. Any doubts? Do you guys have any doubts? Can I move on? Can I move on to the next topic? Sorry, can we work out a problem? Can we work out a problem? Are you guys confident? Do a problem. Are you guys confident? Okay. Okay, fine. So let me get to the question. I want you guys to read this question and tell me once you are done. What is it? 500 into 30. Do you have any doubt regarding that? 500 into 30%. Mohammed, do you have any doubts regarding that? Okay, fine. Okay, now just read this question. Read this question and tell me once you're done reading. Okay. Tell me once you're done reading the question. Okay. So shall we start doing this question? They are asking us how this will be shown in the SOPL. Got it? Is it clear, guys? They are asking us how this will be shown in the statements, financial statements. So, as we have discussed about revaluation, right? We have discussed about revaluation. Okay. Now, tell me, what is the net revaluation gain here? What is the net revaluation gain here? Tell me, what is the net revaluation gain? Is it only 15,000? See, read the question. Read the question. The difference between the carrying amounts of the net assets of Simon and their tax base at 31st December 2018 was how much? 27,000, right? See, that is the difference between the carrying amounts in our company and tax authorities company. That is inclusive of that land. See, what you told about 15,000 is only regarding land. We have some other assets also, right? So the net difference in carrying amounts was how much? Was how much? Or is how much? Tell me. Tell me what is the net gain? What is the net difference in carrying amounts of tax base and our calculation? What is the difference? I want everyone to respond. How much is the difference? It's 27,000, right? It is what? It is what? 27,000. Guys, just give me a minute. Okay. So what is the net difference between the carrying amounts as per tax authority and as per our books? It is 27,000, right? It is 27,000. So I want you guys to tell me what will be the deferred tax that will be recognized based on this. What will be the total deferred tax that will be recognized on the basis of this? So is this a temporary difference or is it a permanent difference? I want you guys to tell me. Is this a temporary difference or is it a permanent difference? It's a temporary difference. Like I told you, the difference between carrying amounts will be permanent. See, in what all cases do we have this carrying amount differences? First is in the case of depreciation, right? I told you, we have worked it out. In the case of depreciation, there might be differences in the carrying amounts of the tax base, tax authority, and our company. And here what we have? Here what we have is revaluation regarding properties, right? Regarding that also we'll be having temporary differences. So what is the total temporary difference here? Tell me. What is the total temporary difference? What is the total temporary difference? 27,000. What is the formula for deferred tax calculation? What is the formula for deferred tax calculation? What is the formula for deferred tax computation? I've discussed it with you. What is the formula? Tell me. What is the formula, guys? Yeah. The temporary difference into tax rate. What is the temporary difference? It is 27,000. What is the tax rate? What is the tax rate? What is the tax rate? I want every one of you to respond. 25%. So what is the deferred tax here? What is the deferred tax? What is the deferred tax? It is 6,750, right? It is how much? 6,750. Is it clear so far? Is it clear so far? Is it clear so far? Okay. Now my next question is, can we recognize this whole deferred tax in SOPL directly as expense? Can we show? Can we show this as fully? Can we show fully in income tax expense as income tax expense in SOPL? Can we show this fully? No. Why? Why? My question is why? Why can't we show it? Why can't we show it? Why can't we show it? Yeah, exactly. See, regarding depreciation and all, we can show directly in the expense. See, but listen, what happened? What is happening in this situation? See, we have revalued a land, right? There is a revaluation gain. I told you, whenever there is a revaluation gain, where will we show the deferred tax relating to revaluation gain? Tell me. Tell me. So can we show this as an expense? Can we show this as income tax expense directly? No. Why? Because there is a revaluation gain there. What is the revaluation gain? But before that, how much have we already shown in the books as deferred tax? How much is the deferred tax that has been brought forward? 2,600. Deferred tax brought forward. Deferred tax brought forward is how much? How much is it? 2,600. What is the closing value of deferred tax? What is the closing value of deferred tax that we got? No. What? See, this is the closing deferred tax that we got. See, as on 31st December. See, the difference between the carrying amounts as on 31st December 2028 was how much? 27,000. So we calculated the deferred tax based on the closing amount. What is it? 6,750. Got it? Did you guys get it? This is inclusive of this 2,600. Okay. This is inclusive of this 2,600. So what is actually the deferred tax increase in this scenario? What is actually the deferred tax increase? See, we have already recognized 2,600. And see, the opening value of deferred tax was 2,600. The closing value of deferred tax was 6,750. What does that mean? The deferred tax has increased, right? The deferred tax has increased, right? See, the opening deferred tax that has been brought forward is how much? 2,600. But in the closing, how much did it become? How much did it become in the closing? What is the closing value of deferred tax asset that we got? Tell me. Everyone. What is the closing deferred tax? What is the closing deferred tax? 6,750. What was the opening deferred tax? What was the opening deferred tax? Tell me. Tell me, everyone. Opening deferred tax was 2,600, but our closing was 6,750. So what happened with the deferred tax? Did it increase or decrease? Did it increase or decrease? Tell me. Increase, right? So by how much did it increase? By how much did it increase? How much increase in deferred tax? By how much? Exactly. By 4,150. My next question is, can we show this full, can we show this full increase in deferred tax under income tax expense? My next question is, can we show this increase in deferred tax fully in income tax expense? Tell me, tell me, tell me. Can we show this fully in income tax as income tax expense? Can we show this as income tax expense in the books? Tell me. Tell me, tell me. I want everyone's response. I want everyone's response. I want everyone's response. Can we show this fully in, can we show this 4,115 directly as income tax expense? No. No. Why? 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 Why can't we show this? Why can't we show this fully as an expense in income tax statement? I mean, in SOPL as income tax expense. Why? Why can't we show? Because there is a revaluation gain in this, right? A revaluation gain calculation is included in this deferred tax. So we have to remove what? We have to remove what? We have to remove that revaluation gain part. So what is the total revaluation gain in respect of land? What is the revaluation gain in respect of the land? Tell me. What is the revaluation gain? What is the revaluation gain in respective of the land? Tell me. Revaluation gain in respective of land. Revaluation gain of land. Tell me. Everyone, everyone. What is the revaluation gain of the land? How much is it? Everyone, everyone, how much is it? 15,000, right? 15,000. What is the difference between, what is the difference? 15,000. What is the tax rate? What is the tax rate? 25%. 25%. So how much is this equal to? How much is the deferred tax in respective of land equal to? Tell me. It is 3,750. Where will we show this 3,750? Where will we show this 3,750? Why do we show this in OCI? Because it is an unrealized gain and a non-cash expense. So as a result, we will show this in under where? We will show this in OCI. Got it? We'll show this in OCI. So if we show this 3,750 in OCI, if we show this 3,750 in OCI, what else is remaining? What else is remaining? What else is remaining? What else is remaining? Tell me. What else is remaining? Everyone, everyone. 400 is remaining, right? See, out of 4,150, we removed the 3,150 part. So what else is remaining? We showed this 3,150 in OCI. So what else is remaining? 4,150 minus 3,750, which is 400. Where will we show this 400? My question is, where will we show this 400? SOPL. As what? We'll show this as income tax expense, right? We'll show this as income tax expense. So as per the question, what is the income tax expense? What is the income tax liability for the year ended 31st December 2028? What is it? How much is it? How much is the income tax liability? How much is the income tax liability? How much is the income tax liability shown in the books? It is 19,400, right? It is 19,400, right? Yeah. So coming on to the 19, so this is the 19,400 recorded in the books as income tax liability. Is this the only income tax liability? No. We have what? We have the deferred tax. How much is it? How much is it? How much is the deferred tax that we should charge on this income tax expense? How much is it? It is 400. So what will be the total income tax expense for that particular year? It will be 19,800. Where will we show this in? Where will we show this income tax expense? Where will we show this income tax expense? My question is, where will we show this income tax expense? We will show this in SOPL, right? What about the deferred tax? What about the deferred tax that we got? What about the deferred tax? See, in deferred tax, 400 will go to SOPL as income tax expense. What about the remaining 3,750? Where will it go to? Where will it go to? It will go to OCI. Is it clear, guys? Is it clear? So now my question is, what will be the closing amount of deferred tax in SOFP? What will be the closing figure of deferred tax in SOFP? In SOPL, you told me 3,750 will be charged to OCI. 400 will be charged to what? In income tax expense. So my question is, what will be the closing amount of deferred tax in SOFP? What will be the closing amount of deferred tax in SOFP? Tell me. What will be the closing amount of deferred tax in SOFP? See, I've already told you while doing this. What is the closing value of deferred tax? What is the closing value of deferred tax? What is the closing value of deferred tax that will be shown in the SOP? That will be 6750, right? See, but we only showed 4,115 SOPL, right? But we showed 6,715 SOP. Why? Why is that? Why is it? Why is it? See, we only showed 4,150 in SOPL, but we showed 6,115 SOFP. How is that possible? Does anyone know? Does anyone know why we are showing 6,715 SOFP and we are only showing 4,115 SOPL? Why is it? Okay, I'll explain. Okay, in SOPL, listen carefully. In SOPL, do we include the values of the previous year? Do we include the values of the previous year? Tell me, will we include the values of the previous year in SOPL? Everyone. We will only include the values corresponding to the current year in SOPL. Is that clear? So, why did we show 4,150 only in SOPL? Because it is the increase corresponding to the current year, right? See, we incurred the deferred tax in this current year. Okay. We incurred the deferred tax in current year. Got it? We incurred only 4,150 in the current year. And that is the reason why we only showed 4,115 SOPL. But let me ask you one thing. Have you already recognized deferred tax in the previous year? Have you already recognized some deferred tax in the previous year? As per the question, did we recognize any additional deferred tax in the previous year? What was the brought forward value of deferred tax here? 2,600 was already there, right? It belongs to the previous year. But coming on to SOPL, will we show that 2,600 in SOPL? Will we show that 2,600 in SOPL? Will we show it? Will we show this 2,600? Why? Because it belongs to the previous year. Got it? It belongs to the previous year and not to what? And not to current year. So that's the reason why we are not showing what. But in SOPL, will we show previous year values? Will we show previous year values in SOFP? Will we show previous year values in SOFP? I want everyone's response. I want everyone's response. Will we show previous year values in SOFP? Will we show previous year values in SOFP? Yes, right? We will be showing the previous year values in SOFP, and that is the reason why the deferred tax was carried at 6,750 instead of 4,150. Got it? Got the concept? Put a thumbs up if you're pakka with deferred tax. Put a thumbs up if you're 100% confident in deferred tax. I want everyone's response. There are around 16 to 17 participants. I want everyone's response. I want everyone's response. I want everyone's response. Come on, tell me. Is the deferred tax concept clear? Is it picture perfect? Is it picture perfect? Any doubts? Any doubts regarding deferred tax? You can ask me now. Any doubts? Any doubts? See, don't hesitate to ask doubts, okay? Don't hesitate to ask doubts. If you have any doubts, just reach out, okay? So I hope that the IAS 12 is clear. Okay, was it beneficial for you guys? Was it beneficial for you guys? See, the main purpose of this revision class is that you guys should get something from it. Okay. Was it useful for you guys? Was it useful? Was it useful? Was this session useful? Okay. So we'll wind it up for today. I want you guys to tell me what all standards do you need help in? In which all standards do you help in? Or which all topics do you need help in? So that we can plan accordingly. Consolidation, okay. What else? What else? What else? See, you guys can tell me so that I can prepare accordingly. That's the reason. Tell me for what all topics. Okay, single entity. Okay, fine. See, single entity comparatively, it is less asked. Okay. Mainly the consolidation part will be asked for exam. Single entity is very rarely asked, I guess. Okay. You guys are feeling difficulty in consolidation and single entity, right? Okay, fine. Anything else? Are you guys facing any difficulties relating to any standards or any particular topics? See, tell me so that I can prepare accordingly. IAS 254. See, this method won't be asked for exam. Don't worry. Okay. They won't be asking. See, this is covered in FA. This FIFO method and ACCA method and all, no, is covered in FA. It won't be examinable for IAS 2. Okay, got it. See, actually, there is nothing in IAS 2. The only thing you have to know is how to value an inventory. How do you value an inventory? Come on, tell me, guys. How do you value an inventory? Based on what? Based on which value will you value inventory? Law of cost or NRV? Got it. Cost and NRV. What is NRV? It is a net realizable value. Got it. Is it clear? See, that's the only thing that's there in IAS 2. Don't be worried about FIFO method and ACCA method. It won't be examined as it is already tested in FA, financial accounting. Okay. Any other standards? Any other standards? I hope everything else is. See, I have seen someone telling me he or she finds difficulty in IFRS 16. Do you want me to take IFRS 16? Do you want me to take IFRS 16? Everyone, I need everyone's response. Is IFRS 16 clear for you guys? Is it 100% clear? Is it 100% clear? Is IFRS? See, don't be hesitated, okay? If you have any doubts, just reach out. If you are facing difficulty in any standards, please mention so that I can prepare accordingly for tomorrow's class. Tell me. So you guys are only facing difficulty in consolidation and single entity. Rest concepts are all clear. Are the rest topics clear? So you're telling me I should start with consolidation tomorrow, right? So shall we start with consolidation tomorrow? Okay, guys. Then we'll be starting with consolidation tomorrow. Okay. Okay, then we'll wind it up for today. We'll wind it up for today. Okay. Thank you, guys.
எதுலடா கிளாஸ் எடுக்கிற?